All right, what's up, what's up, traders? Super excited for today's video. We're looking at Dogecoin, okay? Ticker symbol DOGEE. And what we're going to do is we're going to break down the three main levels that you need to watch for Dogecoin and any cryptocurrency in particular. I'm going to go over the past of the chart and show you valid examples of how to use this strategy and why these levels are so important for spotting a trend continuation or a trend reversal. Make sure to subscribe to the channel if you're new, smash the like button, and we'll go ahead and get straight into the video. We're also going to break down the MACD and how you can use the MACD as a valid indicator to predict a possible crash or a possible sell signal, okay? There's going to be multiple examples in this video, and I'm going to start off by breaking it down at the current recent price action and showing you the main levels that we've been watching. So if we zoom in just a little bit more, okay, what we've done is we've actually taken our swing high, okay, from the most recent swing high, connected it down here to our swing lows. And what we're looking for is a retracement, okay? So we're looking at the 61.8, the 50%, and the 38.2. These three levels using the Fibonacci tool right over here are the three most important retracement levels. The reason being is that they're the most well respected, and about 70% of trading is actually done by algorithms, whether you believe it or not. So it's good to start using some of the tools and some of the numbers that algorithms are going to be using to, predict some of the major levels. So the way it works, right, is if you're in a downtrend, you're connecting your swing high down to your swing low, right, and you're going to see a move to the downside and then a healthy retracement. And if you reject these levels, you're going to get a continuation to the downside. Okay. And that's what we mean. Okay. If we break through these levels, right, that's when you can get a reversal when you break through. And we'll take a look at some examples in the past, such as over here, when we've broken through those retracement levels and gotten a nice reversal. But if you reject these three levels, then you're going to get a trend continuation to the downside. Most notably, we have rejected our 38.2 retracement level on the upside resistance. And it seems Doge is going to be continuing this downtrend that it's in unless we break those levels. Now, there was a strong possibility that Doge could have rallied. Okay. If you take a look here, what we've done is we found our major retracement levels for the upside. So we connect our swing low up to our swing high up here. And we see we came down, we retraced. If we would have held the 61.8% retracement level right here, then there was a strong possibility that Doge could have, had a healthy retracement and ended up continuing its possible reversal and making a new high over this high right here. But instead, we actually broke through this level. Now, the level specifically was 0.08693. So what we're doing now is we're going to be watching this level right here, 0.08505. If we break that level of support, we do have a small demand zone right here from about 0.077 all the way down to about 0.070. Okay. That is a small demand zone that we have where buyers have been stepping in. If you're unfamiliar with demand zones, all it is that each cryptocurrency chart that you look at is a live auction. Okay. And on one side, there's buyers, on one side, there's sellers. If you think of it like eBay, just think of, okay, well, they're selling something, right? In this case, they're selling Doge. And so the bid is going to keep going up if there's a lot of demand for the item, right? And people are going to bid the item up higher because they want to purchase it, and somebody doesn't want to sell it for a certain price. Now in this case, what we're seeing is we're seeing the price fall, right? So basically what's happening is this item on eBay is not selling. Okay, so in order for people to sell it, they have to lower the bid price, and they have to lower the price and lower the price. And there's key areas when it comes to trading that you want to pay attention to, right? You want to pay attention to previous demand zones and previous supply zones. Okay, supply zones are going to be the exact opposite. Those are where there's an imbalance of sell orders that drives the price lower, right? So this could be technically a supply zone up here, right here along our major fib retracement levels. And this is where price, consolidated for a bit ultimately before being driven down lower. So we've seen in the past, we've had multiple times where there's been a demand imbalance and there's been an imbalance of buyers pushing the demand up and pushing the price up higher in these regions. So if we break this support level here, there's a strong chance we're most likely going to head down to this demand zone. Okay, and if we don't see buyers step in, we have a support level down here of 0.06447. Now that's a pretty big drop from where we're at currently. Okay, so I'm not saying that we're about to go there tomorrow or anything like that. I'm just giving you guys the unbiased, analysis, right? Which is really what I try to do. So let's try to go and look at some past examples real quick to show you guys the strategies that we're using. All right. So in this case, what we have is, again, we're measuring our downtrend retracement levels, right? So we have our swing high connected to our swing low down here. We see we come down, we test it right here. Okay. We test the 38.2, get rejected, right? And then we consolidate some more. And ultimately we come up here and look at what we do. We blow past all three of those retracement levels. And what do we get? We get a strong reversal. Okay. And we actually make new highs. So that's how you can track whether something is in a downtrend or whether something is, trying to do a reversal. Now, again, it also does work to the upside as well. So we'll go ahead and not just for downtrends, right? It also works for uptrends. So we'll go ahead and look at some examples in the past over here where it worked as a valid uptrend. Okay. Or in this case, it was actually a reversal, right? So you can use it for the uptrend and you can spot basically, when things are going to break and reverse to the downside, or you can use it to spot a reversal for the upside. In this case, we're connecting our swing low to our swing high. We're seeing we come up, we retrace, right? And we're holding these levels. We're holding our 50% level. We're holding the 38.2. We're really consolidating in this range. And then we try to push higher, but we make a lower high, right? So what can you use to really give yourself an indicator that something is about to sell off? Well, if you pay attention to the MACD, right, and that's going to be right down here, I'm going to show you guys the major sell signal that you want to pay attention to on the MACD, especially on the daily time frame as well as higher time frames. Okay, it's going to be this blue line right here. When you see it cross below the orange line, that is going to be your sell signal. So if you see here, we get a sell signal right around here. We'll go ahead and take the measurement, all right, and look at that. And Dogecoin actually dropped 40% after that MACD sell signal. Okay. Um, Over here, we have another MACD sell signal, right? So we'll pull that up real quick and we'll take a look at the move on this one. And I'll make the MACD just a little bit bigger so you can see our blue line crosses below the orange line. And ultimately, what do we get, right? We get our sell signal right around here and we see Dogecoin drops below 50% on this MACD sell signal. Okay, so this is one of the major signals that you really want to pay attention to, especially if you're bullish on a token or you're trying to buy in on a token and you notice that, hey, well, we actually just had a MACD crossover to the downside. Maybe I don't want to buy right now. Maybe this isn't a good time to enter. Okay. And then we see after we get that MACD sell signal, what do? We get a trend continuation to the downside. We take our swing high down to our swing low. We see we come down, we retrace up to the 38.2 retracement level. We drop down, consolidate a little bit, make lows, come back up to the 38.2, and ultimately get rejected and continue the downtrend and make new lows on Doge, right? And that's something that we've been seeing consistently happen. Okay, it's no secret that it's been a crypto winter and a crypto bear market, and really this strategy is just going to help you spot trend reversals, okay, and spot trend continuations, right? So we're taking the downtrend right here. We see we retrace all the way up to the 61.8 this time. We come down, we retrace back up to our 50%, and ultimately we end up making new lows, right? So we're making a low, and a lower low, right? And at this point specifically on our chart, we ended up getting the MACD sell signal, and we can take a look there again and just see, how useful this tool is, especially for tracking big drops and potential market crashes, right? So we get our MACD sell signal right here, and we see it drop 52%, and then ultimately it ended up dropping 66% on, based off of the MACD sell signal. So far we've gone over the Fibonacci tool and the MACD. Once you start to combine these things together, right? And what I mean by combine them together is you come in at a point like this where you're saying, hey, we're not breaking through, right? We're not breaking through our major retracement levels. What we're doing is we're actually, popping up to them, hitting resistance, dropping back down, and ultimately getting a MACD sell signal. So that's two sell signals that you have basically as a trader that you can look at and say, all right, well, we're not getting any bullish signals. What we're actually doing is we're getting a rejection off the retracement levels and we're getting a MACD sell signal. Maybe it's time for me to close any long positions I have if they're short term, right? Or maybe possibly it's time for me to enter some short positions. So these are just some things that you can use. And if you're following along, and things are making sense to you, make sure to smash the like button and subscribe. So what we're going to do is we're actually going to go to the present day chart and using the tools that we've just received, right? So what happened over here was we actually broke through our retracement levels. We had a huge breakout on Doge, and this was right around the time that Twitter confirmed that he was buying, or Elon Musk confirmed that he was buying Twitter. There was a lot of speculation that Dogecoin was going to be applied as a payment service on Twitter, right? And so we see a massive pump on Doge. We break through our retracement levels, and ultimately, look, right here is when we get our sell signal. Okay, so we get our MACD sell signal, and we know that that's a strong indicator that there's going to be some downward pressure or some downward movement. And we see that we end up dropping about 40%, right around 38%. Now we did try to recover, okay, and we went over the demand zone that we established, okay, because we do have a small demand zone here. We have seen buyers step in and demand step in this range. All right, so we're going to see if we do end up dropping down in here, will we repeat the same pattern of buyers and demand stepping in, pushing the price up higher? So these are really some key areas to watch. But before then, we really have to break down past 0.0836. Okay. If we don't break down past there, then, we're going to be consolidating and seeing some choppy movement for the most part. Now, we did not hold our retracement levels to go up higher. So that's one of the main things that has me more bearish on this is that, we came up, we retraced, okay. And instead of getting a trend continuation to the upside, as we've looked at, and we got a trend continuation to the downside, what we did was we broke through our retracement levels, right? And so if we're not able to get back up above 0.08693, then we're going to be most likely continuing the downtrend and heading down into this demand zone. Now, if we do break above this 0.08693 here in the short term, then there is a strong possibility that, hey, this was just a fake out, right? And we just went shortly below the 61.8, triggering people's stop losses, drawing liquidity, so that ultimately we could have a three-wave move up higher. Now, if we do get the move higher, these are the main levels that you need to watch for as resistance. It's going to be 0.1048, 0.11517, and 0.12553. Reason being is because ultimately this is our retracement levels to the downside. Okay, so we have the downside move, and anything in between here is just considered a healthy retracement. And until we break out past them levels, if we get rejected at these levels, most likely we're going to continue heading lower and create a new low, possibly taking us down to this 0.06477 support level. Okay, so that's basically it for today's video. If you made it this far, I really think you're going to enjoy one of these next two videos as well. So smash the like button and subscribe so you don't miss any more.